My name is Tyler Braun, Director of Financial Planning with the Tranel Financial Group. We're talking investment strategies, and the strategies we've covered already are dollar cost averaging and double compounding. The third phase that we look at is really how do we take all of these strategies and now retire, right? Or if you are retired, how do we start, cracking that egg to start to utilize the fruits of our labor or generate some form of income, but also at the same time protect that nest egg, and that's key, right? Especially ultimately with volatility that's out there and so forth, how do we protect the nest egg, but still generate the income that you need to have the lifestyle that you deserve? So the way that we utilize that is when we build on these different strategies, right? We built off the dollar cost averaging. You've been doing that for years in this example, right? You utilize the double compounding where you're acquiring contributions through, your contribution into a 401k plus the match from your employer. Or post-retirement, right? You were utilizing, let's say, dividend aristocrats, right? Where they were putting contributions in through dividends and then raising those dividends every single year. When we focus on retirement planning and income planning, right? And we utilize those strategies, the number one concern that clients have when they sit down with us is, I don't want to run out of money in retirement, right? I don't want to run out of money. Will I run out of money? That's a question they ask all the time. So when we're addressing this and we're looking at it, what we're doing is we're setting up a portfolio that focuses heavily on what we call recession-resistant holdings. So items that you have to have regardless of the state of the economy. So consumer food, consumer staples, pharmaceuticals, telecommunications, utilities, and energy. Regardless of what's occurring, you got to pay your light bill. You got to buy food. You got to buy Kleenexes, toilet paper, all of these different things. But a step further beyond that is when inflation increases, those companies are passing the expense onto the consumer because we still have to pay it, so the company is still hitting profit margins. So when we look at that, right, if toilet paper costs $1 more per pack, are you going to buy it? And the answer is yes. Right? Same thing for food. These are the essentials that you need. So what we focus on is generating that dividend income. And remember, dividends are a form of yield. It's the amount of income that can be generated without selling or touching principal. So you're living off of the interest per se or dividend that the investments generate, not having to touch the principal over time. And we utilize those dividend aristocrats that increase a dividend each year to give you a raise to help you hedge inflation in the future. So when we put our strategies together, we're building off of these strategies and stating we know that income is key to you and it's extremely important. We ultimately not only want to see you get income, but we want to see you get raises, and we position you to help protect that net worth by utilizing those recession-resistant holdings, and in addition to that, focus on the dividend and also the increasing dividend to help you get that income you deserve in retirement.